Before the video starts, make sure you like, comment, and subscribe. And like always, enjoy the video. So here are 5 steps in order to find a winning setup. Let's get to it. So number 1, you have trends, the structure of the market. Without this, you simply wouldn't know when to buy or sell. So let's jump into the charts. Let's break it down a little bit more. We're going to use a post-trade trade we took. We did take in a Discord, which is NZD CAD back on February 7th. So going to NZD CAD, which we are on, going to February 7th, which is around here. First things first is identifying our market structure. Like you all know, price only moves in 2 directions, either a bearish trend making lower lows and lower highs, or in a upwards trend, which it goes to make new higher highs and higher lows. In both cases, you can obviously see when price is going down and when price is going up. But when price is trending downwards, when price is bearish, you can see how price forms these lows, price retraces, forms these little pivot points, and I call it a pivot point until price breaks out of either this lower low or this lower high, right? And as we continue, we formed a lower low, price retraced, form a pivot, price then had a second push towards the downside, giving us a breaker structure, which now marks this off as being our lower high. Since this is the last recent high point price has been before it gave us the break of structure. And then once price broke past the structure, you can see where price formed this low. And as we broke past structure, like you all know, price has the retest of that broken structure. So now when price is retracing, we just expect price to come back towards the zone. We look for price to tap back into this recent broken structure. Once price can do that, we wait for the shift of structure on the lower time frame, such as a 15-minute time frame, and then we ride this trade back down towards the downside. Vice versa as for the uptrend. In the uptrend, you can see how price went to have this push. We formed a beautiful higher high. Price had this retracement, forming a pivot point because it did not present us with a breaker structure. Once price then had the second push back towards the upside, establishing the breaker structure of this recent high point, we can now mark this off as being our new higher low. Once price broke past, you can see how price formed this area of resistance, marking this as being our higher high. Like we just talked about, once we break past an area of interest, we look for price to come back to tap back into this area of interest. Once price can tap back into, and in most cases you will see price dip just below, we wait for price to get back above this recent zone. Once we're able to do that, wait for that shift of structure, and we ride this trade back towards the upside. We always mark off our structure off of the daily time frame. This is important. So on the daily time frame, you typically just find any given high point or given low point and start drawing out your structure. We have our high, lower low based off of this breaker structure. We have this pivot. We now have this as being our breaker structure, forming this to be our new lower low and this being our new lower high. Price had the retracement, then continuation, performing another breaker structure, lower high, lower low, higher low, higher high, breaker structure, forming a new lower high being here and our new lower low being there. We then had that recent breaker structure around here, and as you all can see, we had the retracement back up towards this recent zone. So now it's time for step 2, which is area of interest. This allows you to find a zone, find structure, either support or resistance, in order to take a position to sell or take a position to buy. Let's jump back into the charts so you see what I mean. When we are identifying our area of interest to where we're looking to take a trade from, I do this off of the 4-hour time frame. I only am able to do so once the daily time frame has performed the break and the retest of the recent broken structure. So on the 4-hour time frame, the simple way of finding your area of interest is simply identifying the recent breaker structure in the market. I want the 4-hour to also be in sync with the daily time frame being in a downwards trend. It is important to have 2 or more time frames in sync in order to find a higher probability position. We can obviously see how we are in this bullish trend due to the breakout of these higher highs. Price then had the retracement, forming another double top scenario because it attempted to give us a breakout but never broke past these recent higher highs. Instead, we formed an area of rejection. Price then formed this double top formation and then had the push towards the downside, giving us the break of our higher lows. Now going from a bullish to now bearish trend. As price broke out of these recent higher lows, you can see how price formed this beautiful neckline area as we form this double top situation. So one, the 4-hour time frame is bearish, and then two, the recent breakout of structure, minor structure, is this recent neckline that was formed. So now we can mark this off as being an area of interest. That's when you grab your tool, such as your box tool, and you mark this off as being your area of interest. To solidify this area as being a area we're looking to trade off of, we want to see 2 or more rejection towards this zone, allowing us to see that it is a struggle for price to break through. Because if price only taps back into the zone twice and then performs a breakthrough, it is not a strong area of interest. I at least want to see 3 or 4 rejections towards this area, allowing me to see that price struggles to break through once we reach this zone. So now if price is above this area and we do tap back into it, I know price has a low probability of breaking through. I can potentially use this area of interest to take a trade back towards the upside. And then vice versa, when price is underneath, if it taps back into this area of interest, I know it's a low probability for price breaking through, and we can use this area to take a sell back down towards the downside. The first rejection is the recent break of structure. We have that one rejection being here. We then have a second rejection being here. We have a third rejection being here, fourth, fifth, sixth, 7, and 8. So obviously we can see we have 8 rejections of price getting treated as both resistance and support, allowing us to see that price struggles to break through when we are either above or below. This is good. So now we can mark this off as being a solidified area of interest for us to take a trade. The next step is your entry signal, bearish or bullish engulfing. Very simple, nothing more, nothing less. This allows you to see if we have buying pressure from this zone or if we have selling pressure from the zone. Again, let's get back into the charts so you understand a little bit more. So for the entry signal, it is simple as day. What you want to wait for is the 15-minute switch of structure. And the 15-minute switch of structure is just allowing the 15-minute time frame, if we are in a bullish trend, to get back in sync in a bearish trend with the daily and the 4-hour time frame. Again, just allowing you to see that 1, sellers are in control, and then 2, we have a ton of selling pressure happening at this area of interest to continue this move back down towards the downside. As price is trending bullish, and if you don't know this already, the 15-minute typically will be out of sync with the daily and the 4-hour time frame once we are at that area of interest we are looking to take a trade off of. This is only because of time frame correlation. So on this 15-minute time frame, you can see how price was in a bearish trend. And as we're waiting for price to get back towards this 4-hour area of interest, our entry zone, we simply just want to wait and allow this 15-minute time frame to work its way back up. And as you can see, we went from a bearish trend to now being in a bullish trend in order to reach our zone. And as price tapped back into our zone, we then want to wait for price to establish some type of breakout towards the downside, allowing us to see that price is now back in sync with the higher time frame, being in a bearish trend. In this case, you can see how price performed this beautiful break of this higher low, signaling that price is now going from bullish to now bearish due to the breakout of these higher lows, forming our new lower high being here, and also giving us a beautiful entry signal being here. That entry signal is simple as day, our bearish engulfing candle. Seeing a bearish engulfing entry signal at your area of interest is allowing you to see that selling pressure is now stepping into play, letting you know price is getting ready to tank back down towards the downside. So as you can see, we had this beautiful bearish engulfing candle engulfing past that previous bullish candle. That's when I found my entry, stops just above that last bullish wick, and targets, I'm targeting my 4-hour
lows. Just an area of structure.
Next, we have time frame correlation. If you don't know anything about time frame correlation, go check out my YouTube video. I'm gonna post that right here. This teaches you and walks you through how to understand each time frame, how it correlates with one another, and how you can use it to your advantage in order to find the perfect position. Last, you have your stop loss and your take profit. Stop loss, just putting it at an area. If you are wrong about this trade, you are completely out at a certain point where you cannot lose more. And then take profit, we're looking to target a certain area to now, if we are right, we don't put up a limit, but we allow the trade to run, squeezing out more profits when we are right about the overall direction of the market.
Like I said, our take profit will always be the recent lower low or the recent higher high, depending on what market we are in. Since we are in a bearish trend, my take profit will always be the recent structure price has shown me, aka the recent lower low, and I'm just looking for price to have another push back towards this lower low, possibly establishing the breakthrough like we've done here. Only thing I'm looking to do is look for price to have the continuation, just continuing to ride this trade back towards the downside to go and form new lower lows and new lower highs. As far as my stop loss, like we just talked about, after we find our entry with this beautiful bearish engulfing candle, we're just looking to put our stop loss just a few pips above that last recent bullish wick when we are in a downward trend, giving price a few pips to have some type of breathing room just in case, like you all can see right here, if price needs to have another retest of this 4-hour zone. If my stop loss was hugging this recent bullish wick, you can obviously see we would have got stopped out, price would have wicked us out, and then had the continuation towards the downside. But just because I put my stops just a few pips above, giving price a little more breathing room, price was able to form that retracement and draw down, tap back into this 4-hour zone, show another sign of rejection before falling towards the downside towards targets.
So I pray that you use these 5 steps in order to find a winning position. This allows you to have more of a strategy, more of a plan, and really go into the market looking at it with ease. Nothing overcomplicating, but keeping it simple and executing when it presents itself. Like always, y'all stay blessed, and I will catch y'all in the next video.